Yeah, what was your question?
Okay, I wanted okay, I asked earlier on if it's possible for one to use that limit order to actually make a protest and then sell when the price is a bit better, like having the both order placed at almost the same time.
Both TP and SL, right?
Yeah?
Is that your point? Both take profit and stop loss.
Yes, sir. Yes, sir.
Okay, okay. Yes, it's possible. That's where Oko comes in.
Okay, sir. That's okay. Okay, sir. Okay, sir.
All right. Okay. Okay, guys, let's do this. Now Oko is a very powerful tool. I hardly use it though. So now Oko means one cancel the other, right? Under here you see your stop limit and you see Oko. So okay, let's get into a trade. Let's see a trade on cake. Cake is still up and down. Let me say we've gotten cake already, right? Let's get cake. Let me buy cake using slow. Let me buy it at okay, still dropping. Let's buy it at 16.08. Let's buy $11 worth, right? Just for our class. So order created, order filled. That's good. We've gotten cake, right? So now I've already gotten cake. Now I want to now use Oko. Are we together? I want to use Oko. So click on Oko. Now you can see stop. You can see limit. Stop and limit is your normal stop limit order, right? Don't forget, we just did an example with this. Stop and limit, see it. Is your normal stop limit order. So that means this is your stop price. This is your stop price triggers your limit price, okay? Now this price is your TP. This is your take profit. This is your stop that triggers your limit price. Then the amount of USDT you are buying will show you the amount of cake here, normal. Okay. So let's say we bought at 16.11. I want to sell off at 14. Okay, 0.2. When it gets to 14.2, a trade of 14.1 should be triggered. All right, that's what you're saying. I want to take profit at the same time once it gets to 20. Okay, and want to sell off all the cake. Want to do that with the total amount of. You see, this 13.6 here is working with this. Okay, not these two. This might take profits, and these two determines what my stop loss. This is my trigger. This is my trigger price that triggers the limit. Okay. So I'm selling this at this TP and at this what SL. All right. So that's using Oko. So I click on sell. Okay, this is actually less than 10, so it's not going to execute. All right. Binance don't allow you to trade less than $10. Hope you get. So we are going to make this quite high, maybe 15 point. Remember we did it last time, it gave us that same error. Let's do 15.9. No, let's do okay, this should be 16. Oh, sorry, the cake has already dropped to 15.9. Okay, okay, that's 9.5. When it drops to 15.9, another of 15.89 should be placed. Okay, you see this? That's what I'm telling the market. I hope this is up to $10. So this is going to execute. You're going to see it practically. But if it pumps to 20, you should sell off. But I think this is going to get filled. Okay, this is 15.9. Then okay, this one another. Okay. This is your TP. These two triggers or stop limit. That is triggers or stop loss. This amount of cake that we can buy, and 100% means it's selling off at your TP price. Okay. So if I click on sell, it's going to OCO sell order was created. Go down. You see the double orders. That's OCO. OCO sells 2 orders. Limit maker. This is the first one. Sell off at 20. Okay. At this price. Then the second order, stop limits. Okay. Stop loss limits. This one normal. We can set it. I explained it to us. When it gets to this, price, sell off at this price should be triggered. All right. So you can see the 2 orders will set automatically. Get it. This is the question you ask, right? This is one of the best ways to enter your trade. Know your TP and your SL. So once this trade goes down to this point, if I'm not online, you should sell off. Once it goes down to up to 20, if I'm not online, you should still what? Sell off. So these 2 prices, you have them already. So it's very, very good to always use your OCO to enter your trades. All right. Once you've actually entered your trade already. So to leave your trade, just use OCO to set it. I trust that's clear, guys. So I can just leave it open. But once this gets to this point, it's going to what? It's going to get filled, right? So I used $11, so I should be losing around $0.1 or 0.2 or thereabouts. But if it goes to my TP, I should be gaining around what? Around 2 point something. Trust that's clear. So I'll just cancel this. If you cancel one, you cancel the other. I just canceled one, I cancel both of them. That is just OCO. One cancel the other, right? So one of the orders, if your TP hits, your SL will be cancelled. If your SL hits, your TP will be cancelled, all right? So that's just the explanation. Was I too fast? I don't even know that I was too fast. Okay, guys, is that clear enough? Questions? Was that clear enough?
Yeah, it is, but I still have more questions on it.
Okay. Any other person, any question on OCO? Okay. Okay, Bobo, ask a question.
Okay, sir. Actually, it's not exactly pertaining to OCO, but it's something relating to it. I want you to tell us like the proper like risk management that we should use. Let's say now if I'm targeting my trade to like maybe it should get to my cake to get to $20, my TP.
Yeah.
Then what is the proper risk management that I will give a space for my SL, even though it's like consolidating, so that it can breathe maybe and trigger my TP. I don't know if you get me, like the proper risk management.
Okay, the proper risk management actually for trades, that's also be for the committed persons that actually from this call. That is who are supposed to give the privilege of that answer, right? Like normally I'm supposed to you guys how to trade on spots, but I'm just trying to also show some other things. But it's still fine. Now, one of the best, we call it RRR, risk to reward ratio. Okay, is 3:1 or 1:3. It means if my SL is 10% below my entry, my TP should be what? Not less than 30% above it. If I'm losing $1 to a trade, I should be getting not less than $3 out of that trade. If it goes to my favor, that is just the point. If I'm making $10 out of that trade, if I'm losing $10 to that trade, I should be making not less than $30 out of that trade. That's the RR of 1:3. So if I'm losing 10%, it means I'm gaining over 30%. Is that clear? That's the proper risk management. If I've gotten my entry right, then if I choose my SL to be 10% below it, that is That is 1. Then my TP should be 3 times my SL. That's the meaning of 1:3. Risk to reward ratio. It's one of the perfect ways. It's one of the perfect RRR to use actually. You can see others. Others can be probably 1:1. There's no point. If I'm losing 50%, I should be gaining 50%. That's a very, very, very poor risk management. All right. If I'm risking 10% to a trade, then that trade should fetch me like 30, 40% above, or even more. Is that clear? Okay. I'm not saying you should risk just 10%. It's just an advice. It's just, will I say, okay, not advice, but you can choose to risk 20. So if you are risking 20, that is 1. Then 1:3 means as you're risking 20%, your profit should be what? 20 times 3. That is 60%. That's one of the best risk managements to actually use. Other persons can do 2:3. Okay, other persons can do 1:1. That's 50%. That one is very poor. 1:3 is quite okay. Okay, cake is trading at 15.8. If I left that OCO order, it would have been filled by now. So we get a difference between market limits, stop limits, and OCO. Is there any complications? Are there any complications? Feedback, guys. Any complications? It's just one person that is dropping comments. Let me get comments from you guys now. Oh, okay. Mike is not clear. Richard has a question. Okay, Richard, your question.
Hello, sir. My question is, now you've shown us 4 different ways of carrying out the trade.
Yeah.
The question now is do you recommend a particular is there a situation that one method is preferred to the other?
Okay, very good question. Very good question. Okay, now if you've defined the kind of trader you are, if you've defined what you want, you've defined why you trade, you should be able to answer that question, right? Now, if I want to get a token immediately, like I don't want to waste time, probably a news is coming up, or probably there's news that this token is going to pump in the next 5 minutes or thereabouts. You will not come to the market and start doing limit order. Do you get? In such cases, where you want to get that token at that particular price, you are doing market. That's where market comes in handy, right? If you want to get that token immediately, you will not come and be doing limit order to be getting a particular price. No, you are going to buy it instantaneously at the current price because you want to get it fast, right? That's when you use your market. Now, as you're using your market, immediately try to do your OCO, okay? Either do your stop limit or your OCO. Every trader should do that immediately, unless you are an investor. Investors don't worry about where is it dropping. No, investors are always worried about what at the long run. They're not worried about this is coming down, this is going up, whatever. Investors are actually after the long run, okay? So an investor can actually look at this chart using a weekly time frame. You can see the difference. Cake has been dropping for the past 3 weeks consecutively. Very, very bad. But this week it has been popping from this point, okay? Now, an investor can get cake from this point and they are planning to sell it when it goes up to $44 or thereabouts. Okay, they are holding for long term. So them now, they just come to the market and buy using market order. They don't really care. Do you get? So that's how situations will present themselves to you. Maybe sometimes you want to just sell off a coin to USDT. So that you just probably sell through P2P and send money to your bank and fix stocks. Those kind of situations, you're not waiting for any limits. You just, since it's something that is quite urgent, you're selling off immediately, right? You sell off using market. That's when you use your market order. Then your limit order is when you speculated that, okay, this price is going to get to this point. So I'll use limit order, but I don't want to sell at that instant. So I may not necessarily use OKO, but it's quite very, very important that you always trade into your SL and TP. Okay. So most of the time, before you trade your SL and TP, go to your chart, do your 10% below, 30% above. You get your SL, you get your TP. Okay. It depends. Or you can do your 10% below, 50, 40% above your entry. That's what I'm trying to say. 10% below means 10% below your entry, right? 40% above means 40% above your entry. If you bought at this price, and you're selling at this price, you're in profit, right? If you bought at this price and selling below it, means you're in loss. So your SL is down here, your TP is up. So those kind of cases now, you use your OKO. I trust that answer your question, Richard. Richard, is that clear? Good. Okay. Mikey, your question.
All right, good evening, sir. My question is still on that OKO.
Okay.
Because I'm still trying to figure out the stop loss as well, but I just get to understand now when you just explained now that, okay, when I bought cake at the current market price, I set my risks at 1% ratio 3. Abi?
Yeah.
So I'm losing 10% to gain 30%.
Good.
So
something like that.
I just
It doesn't mean you cannot adjust it too. I'm just saying. Probably if you go further to read, you can choose to adjust it the way you want. Okay.
Okay. Now, so that means now when I want to sell now, so I set my stop loss to be 1% and my take profit. So the both trade are selling at the particular the particular amount fixed, right? The both trade will sell, right?
No, I'm not getting you.
Get me?
No.
Okay, no, I set my stop loss to be 10% lower the price I bought it. And I set my take profit to sell 30% or more.
Yeah.
So the both trade are still sell trade, right?
Yes, sure now. The OKO is here.
Yeah. Okay.
That's why I said I've gotten cake first. Look at it. So I now use OKO to sell.
Okay.
Yes. So once cake gets to $20, sell off. Once it reduces to 15.89, sell off. Yes. Okay. If I had left it open now, by now it would have been sold. You see it, right? Because it's quite less down ahead. That's how it is.
Okay. So now I'm still having issue with that stop and the limit. The stop and the limit. I got that and this thing.
If you get OKO, then you understand stop and limit now. Limit is that you want to buy cake at a particular.
Sorry,
okay.
I'm talking about the stop limit rather.
Okay.
That price and
on this OKO, this 2 is your stop limit. Stop and limit.
Okay.
Just if you change it to limit now, it's just that 2. The price will just go up.
Okay.
See it. This stop limit, and limit. The stop price is the trigger to your limit price.
Okay, sir.
Your stop price should always be a bit higher than your limit price. Because if I said if the price get to 15.6, sell off cake at 15.4. Sorry. Please know what I'm teaching you. It should be close. People always get all this is messed up because they don't really know how to set this thing. This is what you're telling the market. You're telling the market that if the price of cake goes to 15.6, it should sell off cake at what? 15.4. This order is going to peak. Why? Because, let me explain this clearly to you. Let's have this on 15 minutes. Let's have it on 5 minutes, actually. So you see it's quite clear. Good. So I said, all right, let's have this. We have 10 minutes chat. Okay, it's not 10 minutes chat. Let's see if I do this. Okay, come. Let's do 15 minutes. Good, good. Mike, you guys just follow this thing and get to understand this and understand it well. Okay. Now look at this. I said, if I'm using stop limits, my stop price, that's the trigger, is quite higher, a bit higher than what your limit price, because your stop price is a trigger, it's a trigger condition. You're telling the market that if it gets to this point, you sell at this point. So I'm trying to tell the market that if my price gets to, no, not trend line, I'm not using trend line. Sorry, just extend this. I'm actually teaching you guys basics here now. Still fine. All right. So I'm telling the market that just look at this. Down here is your date. Down here is your price. Okay. So once I'm using my horizontal tool, you should. Where's this tool again? Horizontal line. Okay. I'm telling the market that if this price gets to 15.46, you are seeing it, right?
Yes, sir.
If the price gets to 15.46, let me remove this. If the price of cake gets to 15.46, it should trigger the sale of cake at 50.44. You see, it's quite close. But I'm using a price lower than the stop price, because if I use a price higher than the stop price, let me say I now change that information that if the stop price gets to 15.4, a trigger of cake to sell at 16 should be triggered. It's not going to work. You get? It's not going to work because this price is higher. So it has now have to wait. When it comes down to this price, it's not going to even peak. But once it gets to a price that is coming down, it came down from this price before it gets to the current price. So the current price is higher than the price is going to be triggered at. So the price is going to trigger at is going to peak. So your limit price should be a bit lesser than what your stop price. It should not be higher. If it's higher, it's not going to peak. Most persons used to complain that, okay, their stop limit always to peak because they don't know how to set it. Hope you understand. Mike, do you get?
Yes, sir. Yes, sir. I got it now. Thank you, sir.
Yeah, so this actually the decimal difference should just be small. That's how I trade. Don't go and be giving gap. Maybe you are putting 15.6 here. Here, we'll now put 14.4. It's too wide. It's too wide, right? Something like this. It's too wide. Thus, it should not be close. Maybe you've done your calculation. Maybe you've done 10% below, 20% below, 50% below. And it's about the price is at, let me say 14. Okay? Let me say 14. So you can just, okay, I want to sell off at 14. Then a limit, that's it. My trigger price should be 14.1. You get it? Just a bit higher, right? I do 14.1 or 14.3, something like that, okay? Is that clear?
Yes, sir. And sorry, sir, lastly, before for instance, now I bought the cake. I bought cake as 15.0. Now I bought cake as 15.0. So should my stop loss now be below the amount I bought it?
Yes, now Stop loss means you want to stop your the amount of losses you get from that trade. When you sell lesser than your entry, that's when you're at loss. When you sell higher than your entry, you're in profit.
Okay, all right.
You get, you bought at 15 and the market is coming down, you are selling at 14. That's at loss now.
Okay.
So, but this point now, why you use SL is because you choose to lose 10% of it. If you not use SL now, you might end up losing more than that.
Okay.
That's the good thing about SL. Then take profit means higher. You bought 15, you are selling, you are taking profit at 16, 17, 18. You get? Is that clear?
Yes, sir. Yes, sir. It's clear.
Please ask your questions. So ask your questions. When you ask questions like this, you learn. It's when you ask questions, you learn. Don't feel that the question is too easy to ask or something. No. Ask your question. So everybody is clear, right? So no question. I not plan holding this cake. Let me say at loss 10.6. I'm losing around $0.4. That's fair. I'll still leave it. Let me just leave it. Let me hold it. Let me hold cake a bit. Any question? All right. Okay, Richard is cleared. So everybody is clear. No question. All right. That's good. So once again, I want to thank you guys for staying with me down to this time, and I trust we've learned a lot, right? So who can let me just get feedback. So just response, at least from day one to this point. If you know you are just joining in on the call and probably don't know how to trade before, but now at least you can trade. You can confidently say you can trade right now. Can I get to know? Do we have anybody like that on the call? Probably you've not traded before, at least from the class held, you can actually trade now. Is there anybody like that on the call? Nobody's saying anything. Okay. So King Smart, you are cleared, right? Okay. All right, guys. Thank you so much. By the grace of God, I will try to make the videos available, the recordings. We'll try to make them available. Let's try to stick to these things, okay? Beyond what we've learned, beyond the whole classes and all of that, you have to personally go carry out everything you've been taught. That's how you become a very good trader. You don't trade in fear. You trade with zero emotions, right? Don't be always afraid I'm going to make mistake. I'm going to make mistake. No, just go on and try them out. Try these things out. So as God will help us as much as possible, if you don't really understand anything, you can come to my DM. And by the grace of God, we might have signal groups, okay? We'll have a group for signals. Signals is more like giving you what to trade, tell you to buy these at so points, sell at so points, okay? They are called signals. So if you're interested in a signal group, you chat me up on WhatsApp. We'll have a signal group created, but it's not free. Signal groups are not free, actually. I work with my team and know how we can regulate the price and all of that. So if you want to learn technical analysis, it's very, very important. Chat me up. I know some persons have chatted me up and the price was quite high and all, but we are trying to work on something, okay? It's very, very important for you guys to learn technical analysis, all right? So as God will help us to see how we can get that done also. If there's no question, That will be all. Glory to God. We've come to the end of this section or batch A of the project. And I give God the praise. I know at least everybody on this call can trade effectively and perfectly well now. And if you'll be hearing about DeFi, decentralized finance, you're hearing about PancakeSwap, hearing about this and all of that, I want to really learn DeFi. Yes, also have that package also. Can chat me up about that too. Okay. So thank you. If there's no question, we'll call it a night, not a day. All right. Good night, guys. Thank you so much. God bless you. Richard said he wants to be tutored more by me. Okay. Even if it's personal. All right, sir. That will be a privilege. It's okay. We'll talk. We'll chat. Okay. Yeah, I have my students on the call too. Okay, guys. Just chat me up. Just chat me up. Anything. Just chat me up. Thank you, guys.